Most major chip stocks started dropping after reporting their earnings since May. What does history tell us in similar situations when the NASDAQ valuations are so high and when the big tech companies or big chip companies have reported stellar profit, but the good news has not been good enough for the investors? Let's draw similarities between the 2000 dot-com crisis and the current market situation. A lot of things look similar. Let's look at it recently. We can see the top three contributors for NASDAQ: Nvidia, Micron, and Broadcom. Both Broadcom and Nvidia actually has dropped more than 10% after reporting their earnings. And Micron announced earnings a couple of days ago, despite having enough profit and setting very good guidance. They are also down after rising for more than 10%. What does this tell to us? A, people are obsessed already, like are tired of hearing good news. This is the biggest red flag. And let's see what happened in the 2000 crisis. The top three contributors, Intel, Oracle, and Cisco, they had very similar situations when they peaked, and they were not able to sustain their same growth. Valuation cracked, and that's when the burst started getting bigger. And you can see here when the technicals showed that they have been on high highs uh, continuously for more than 4 or 5 years. Before 2000 burst, NASDAQ was continuously climbing, and it constantly touched the overbought territory for maybe 4 or 5 years. And once all the top contributors evaluation cracked, it actually couldn't even go back up, and it constantly went towards the oversold territory, and the correction led to more than, let's say, 50 to 60% or more in the following 2 years. Between 2000 dot-com peak and now, a lot of similarities. The valuations are pretty much at the peak. The NASDAQ is heavily concentrated by like a very handful of stocks, and the startup failure rate is approaching the peak as well, which are fueling the growth or like profit for the highly concentrated contributors. The last but not least, when there is a initial phase of investment, people pour in money, and after a couple of years, naturally we tend to optimize the investment or like hardware usage. This is something called Moore's law. Naturally, as we start working on something, we find efficient ways, and then like instead of buying the same amount of hardware, investing the same amount of money, we will find savings opportunities. That's an important factor. The Moore's law actually naturally reduces the spending on hardware, especially on the GPUs in the compute memory, etc., that we have had in the last 2 years. And this is the period that where we can clearly see a significant growth, and like a lot of chip companies got added to the $1 trillion market capitalization. That's significantly not going to sustain, and we can already see not enough forward PE guidance or future backlog of orders. While these things point to likelihood of correction, especially given this is a midterm election year, I'm positive that this won't be as big of a crash like 70% we had in the dot-com crisis time. The peak of NASDAQ is not as much as we had in the 2000 crisis. And also, The number of companies, the toply concentrated companies or the startup companies that have had uh, net negative cash flow in 2000 is way more than what we have today. So uh, the final call out here is for people who are thinking this recent correction is over in chip stocks. The second half of 2026 probably may have some surprises for us because the top contributors in NASDAQ have corrected more than 10% doesn't mean that it's time to buy them. And also use your capital wisely to split into 10 equal trenches and then slowly enter the market rather than taking a huge risk at once, because this is a midterm election year. There are a lot of external factors that can influence the market mentality. So next 6 months is not the time to go all in one. And do not use the 6 months time frame itself to spread all the capital into 10 equal tranches. Do it longer, slower, hold your horses. You have a longer ride. As always, this is not an investment advice to cash out or like make any investment decision. This is my learning, sharing my experience. If you like this, share it with others and subscribe to my channel for more informative videos.